can people be so confident that Powell won't crush the economy? Well, I think it's dawning on many of the biggest of investors that this economy is so strong that it can handle a series of rate hikes because so much of the spending we're seeing is related to the great reopening and the normalization of remote work. That's finally drilled into their heads. That said, while I appreciate hope as a mindset, I'm not as confident as a lot of the buyers who are paying up at the end of the day. I suspect things simply aren't that rosy. We are seeing a level of enthusiasm here that, to me, feels unjustified. We shouldn't be going back to a mentality where we like all stocks because so many of them will miss their numbers and so others will hit us with negative forecasts. However, it's clear many stocks that were stuck in a prolonged bear market have been sprung by Powell's comments. The former high flyers that have been obliterated since November by inflation fears have suddenly gotten a new lease on life. But here's the problem. Tons of those stocks just aren't worth much, regardless of whether Powell steers us into a soft landing or a hard landing. We've been saturated with awful merchandise, the greedy men and women of Wall Street, from garbage IPOs to garbage SPAC plays. And these virtual albatrosses weighed us down. They are millstone around the market's neck. And I think they'll go right back in the penalty box the moment we get more economic data that is hot. If the numbers are scorching, people realize Powell has to tighten more aggressively, and this group will get dumped. Why not dump it before that happens? If the numbers are bad, people start wondering what any of these newly minted stocks are really worth. Why not get out ahead of that? So let's recognize that this is a moment where Wall Street recognizes that Jay Powell is ready to use all the tools at his disposal to slow down the economy. Give us time to fix our supply chains, restock our inventories. One last thought that I think many of you have. If a company's doing really great, what the heck does it matter about the Fed? Why are you talking about the Fed so much, Jim? I sympathize with that view. Companies should be valued on their own merits. Same with strong sectors, as you will hear later in the show. But that's not always how it works. There are periods, extreme periods, where the economy gets so out of whack that the stock market itself becomes a pariah asset class, a source of funds for other asset classes. So an individual company's merits simply won't be reflected in its share price unless it catches a takeover bid. Given that the Justice Department and the FTC seem pretty hostile to mergers, I wouldn't hold your breath waiting for an acquisition to save you. So the bottom line, right now, we need to bow down to the Fed and the forces of inflation. Anything that brings down inflation, including tough statements from Jay Powell, will make big institutional money managers more likely to buy stocks rather than sell them. For the moment, that's what controls the stock market, as long as the war goes on and the economy breeds inflation that soon few can afford.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.